Hey everybody, and welcome to Stock Abilities. I'm going to be talking about GameStop and why I think that game is going to be coming to a stop very shortly here. I covered in the video with some details, so make sure to watch till the end of the video to get the whole context of what I'm referring to. But GameStop, I'm sure you guys are aware, is a gaming company. It's been surging quite a lot in the last couple weeks. How it's going to progress into the next couple days, it's kind of subjective, but I'm going to share my input. And feel free to share in the comments below what you feel the direction for GameStop is going. But essentially, the narrative going on right now is that, uh, Reddit's pushing up this big movement. It's creating this big parabolic event. The problem with that theory is covered by Cramer and a whole lot of other people outside of mainstream media is that they create these narratives and make them, come to life through different news and media outlets to make it look like that's what's creating that momentum. But you'd have to legitimately believe that Wall Street bets can carry literally hundreds of billions of dollars of value to amplify a share price like GameStop up to the $200 to $300 a share in the after hours currently. The ultimately it came down to that it somewhat created kind of an infinite short squeeze, but that short squeeze was there long before Reddit came in and Wall Street bets came in. They might have pushed it up a little bit, but ultimately the short squeeze was inevitable to happen regardless. That's like them probably potentially taking credit for things like Tesla and taking credit for other different variations of short squeezes. A short squeeze is a short squeeze. It does not have very much to do with a GameStop and the Wall Street bets movement as they keep pushing. The more that they push it in that regard with big media outlets, the less likely that is to be the scenario. I don't believe personally that they really have that kind of momentum that they can, push literally 20 billion evaluation, all this, this volume and everything. 143 million shares, it looks like, were pushed in that given day, just in one day. That does not seem very realistic of something that an individual or even multiple, you know, retail investors can cause that kind of leverage. Now, this is from Trade UI here, just as a little bit of a jump back more into reality here. Now, these came in as kind of late prints in the afternoon. There was such massive volume, they didn't show up right away. But in the after hours here, you could see these late prints of the $26 strike, $25, $20 strike, January 29th expiration. So it looks like someone exercised a massive amounts of shares into the close, which is likely the real reason for the jump up in the after hours. This is not bear. This is not necessarily bearish, but at the same time, they're massively exercising these shares. So from the options point of view, the valuations in the chasing with the high implied volatility, you got 600-700%, even on the further out ones, 200 to 300% implied volatility. This is not a very stable premium that you're working with, but it's also a likely sign that this kind of big movement might be over. You can check that out in the description below if you want to see more information about Trade UI. I'm not going to go into too much details into that, but you got literally almost $20 million in what looks like a massive exercise right before close with all of this big money flowing in and it's flowing out as well. So it created that spike, the exercise spike. They're likely going to kind of hold it in that range just to keep it alive so that they can slowly trim the rest of their shares. But in regards to the options scenario, might not be the best idea to get into. Kind of depends how, if you're going to do options on this, do deep OTM out of the money options. The in the money intrinsics are going to get crushed quite substantially, and you're going to be paying a very high premium on those particular ones here. There's rumors that Melvin Capital might be, going bankrupt. just a rumor at this point, all speculative, not going to go into too much details on that. But you got to go into the input here of Wall Street Bets having that kind of leverage. They have, 2.6 million users currently, but most of them, I believe, just come here to laugh at the wild gamblers here because a majority of the time, a lot of them are not making very much profit. GameStop was probably one of the bigger ones here. Fuel cell, they kind of buried that one pretty quick. I've tried to post some, various posts, and ultimately led to them pretty much purging my post and not letting me share it because it wasn't related to GameStop in particular. You have basically, as you can see here, I got a temporary ban for trying to talk about another subject. They didn't like the ticker I was talking about. I brought up BB, brought up this ticker in particular, and I got almost instantly banned. I've never had this happen before. And their input for why was bad DD. Very vague input, wasn't really clear as to why I got banned in particular. Not that big of a deal for me because I'm not on Reddit very much, but just as a reference, I got banned almost instantly from posting this. But, just from a technical standpoint, you have basically uh, it in its peak when it was actually making profit, when it was net profitable, it was really strong in the early 2000s. A lot of people were still going to GameStop. A lot of digital wasn't really all that big of a thing yet. And it hit its peak here in 2007, and then it's faded and consolidated and then tried to break out again later on, but then it ultimately faded and crashed. Now we're hitting an obscene valuation of over $200 a share, and most of this pop happened in literally just a week. It hasn't been that long, and you're seeing this kind of push with GameStop all out of pretty much no real reason. And I'm going to jump into this video here. So listening to what Cramer is saying here. Now keep in mind, this isn't from CNBC. This is literally him talking about this from basically his own input, his own website, whatever. He even says in parts of the video that he'd never say this, on TV because this gives you a more clear idea of what their intentions are in this kind of regard. So listen in here for just a few minutes.
From what I was talking about at the beginning where I would be buying the Qs and stuff. Right. This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment, if I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today. So, you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research in motion. So we're seeing that. That's, again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game. Okay.
It just, a brief summarization here. He's essentially saying that, they create these narratives. They create this kind of a push. They create this kind of reaction, then they hype it up through the media outlets, and then they create this kind of motion from the up and downs or where it's overly bearish or it's overly bullish. We've seen this actually on CNBC very recently with GameStop prior to the next bounce that CNBC was very, very bearish. They did a very long segment on this. They pushed it saying, hey, we're going to probably be crashing soon. Get out now. He's basically saying they were creating that narrative before that pop because they already knew that the pop was coming. They were essentially chasing people out before that continued squeeze up. And that's about all I wanted to cover in this video. If you guys had any other input in regards to that, if you want to see more of that video, Cramer isn't exactly the most reliable source, but when you listen to him outside of CNBC and outside of his skits that he has to read off of, he's a pretty honest and direct person in regards to his previous hedge fund experience, in regards to what the reality more of the market is. And I'll link to that in the description below as well if you want to check out that video, which I'd highly recommend. Gives you a lot of perspective into the stock market, gives you a lot of perspective into GameStop and why they're creating these narratives and why they're encouraging that Wall Street Bets was the one who pushed this. They use those narratives because those narratives are getting traction, those narratives are getting views. They're creating retail investors and traders that are going to get burned very heavily by following this hype and thinking that it's just going to infinitely go up, and that's not likely going to be the case, especially with the most recent surge of volume, almost historical volume. And they're claiming that Wall Street Bets created that kind of amplification. That's not realistic for a group of retail investors, traders, what have you. That kind of movement is not likely to occur. But coming full circle here, millions of dollars of options were exercised, deep in the money options. This is likely the reason for the parabolic up. Whether this means that there's going to be continuation into tomorrow, yes and no. The ultimate answer is likely might see a little bit of a pop more into tomorrow, but if all this big money's flowing out, it's likely going to flow into another ticker, and they're going to do the same thing again. They're going to pick another narrative, and they're going to push that narrative to the best of their ability. But thanks for listening in, guys. Feel free to comment below your own input on GameStop, your own input on Wall Street Bets, and all that kind of fun stuff in the comments below. And thanks for listening, guys, and I will see you later on.